Welcome to Growth Investing Mastery. Today we're going to look at a company called Astera Labs with symbol ALAB, and they're in the AI hardware space. As a reminder, this video is not a recommendation to buy any stocks. Let's dive into what the numbers or financials for Astera Labs look like. In the past year, revenue went from 51 million to 141 million reported in their last quarter. And that's up 179% year over year and 25% quarter over quarter. You can see that if we look back a few quarters, revenue went from 77 million to 113 million, which is a huge jump up. And that corresponds to the company's narrative about launching a new product line, Aries, which started to sell in production volumes. When we look at EBITDA, a measure of profitability, we see that a year ago it was negative 10 million and now it's positive 1 million. In between, we see there's a quarter that had negative 82 million of EBITDA, and that corresponds to when the company went public. When companies go public, they often jam all the expenses of the IPO into that one quarter. When we take a look at net income, we see that it was 14 million a year ago, and now it's currently 25 million. And similar to EBITDA, we have a large negative net income on the quarter where the company went public, which is to be expected. Also, keep in mind the 25 million on this last quarter had a one-time tax benefit, which the company mentioned. When I look at these numbers overall, the revenue numbers are definitely more impressive than the profitability numbers. But since the company went public recently, they've switched to GAAP profitability, and it seems like profitability is ramping up as operating expenses are not growing as fast as revenue, which we'll get into more details later. Astera Labs builds connectivity products for AI hardware and cloud infrastructure. The company addresses bottlenecks with data, networking, and memory, and diagnostics and telemetry are used to troubleshoot tricky issues such as overheating in data centers. They have a platform called Cosmos, which allows software-driven development of the hardware. Astera Labs was founded in 2017, and they IPO'd recently last year in March of 2024. The headquarters is in California, and the company has 440 employees. They're also looking to hire more. Cash is 914 million, and they have practically no debt, with just 3 million of debt. The market cap is $11 billion as of today. The naming theme for Astera Labs products is to name products after sun signs, or their entire platform is called Cosmos. The first product they have is called Aries, which is for signal integrity with data bottlenecks. Taurus is the second product that Astera Labs has, which is shipping in heavy production volume. That deals with networking issues. And the company has two more products which are expected to ramp in the second half of 2025. Leo, which is a new standard for memory bandwidth, and Scorpio, which is a network fabric switch. And they have two series of Scorpio, an X and a P series, which we'll get into more details about. The Cosmos software platform spans all products, and the company says it's a goldmine of information for diagnostics. The company explained that Scorpio can be integrated with the API very easily, and Scorpio is their newest product. Astera Labs reported Q4 2024 numbers in February of this year. The company had guided revenue to be 126 to 130 million of revenue, and they landed at 141 million of revenue. That's up 179% year over year and 25% quarter over quarter. The company had guided adjusted EPS to be in the range of 25 cents to 26 cents, and they landed at 37 cents. Additionally, GAAP EPS was projected at 4 cents to 6 cents, and that came in at 14 cents. And keep in mind, they did have a one-time tax benefit, which if we back that out, it would have probably been GAAP EPS of about 7 cents. So those profitability numbers might be a little bit lower without that one-time benefit. For quarter 1, 2025, Astera gave the guidance of 151 to 155 million of revenue, which would be up 138% year over year at the high end of the guide. and 10% sequentially. And Astera reported at a time when growth stocks started tanking pretty hard. And I think the market was looking for any flaws in results and saw that 10% sequential growth as potentially a problem. However, Astera has been public just 1 year, and their track record is to beat guidance significantly. So I'm expecting them to beat that top end of 155 million by a lot. And I could expect them to come in maybe even at 170 million or higher potentially. The company guided adjusted EPS to be 28 cents to 29 cents, which is a tick up from where they guided the Q4 numbers. However, on GAAP EPS, they projected 3 cents to 4 cents, and previously on the prior quarter, it was 4 cents to 6 cents. So I'm interested to see why the company is projecting GAAP EPS to be down a little. That is slightly concerning to me. Reviewing the narrative or story that Astera Labs told in Q4 of 2024, they say that Leo and Scorpio are ramping pre-production volumes, and those are expected to ship heavily in the second half of 2025, which should produce a boost to revenue later in the year. Scorpio is expected to be their biggest product line, and that surprised many analysts, as analysts were asking questions, how do you have such visibility into Scorpio becoming so big? Astera said they see robust secular trends in 2025, and it had no mention of a slowdown. The company is advancing development of the UA Link consortium, and Astera Labs recently replaced Broadcom in this consortium. The operating margin for the last quarter was 34.3%, and that's up sequentially from 32.4 in Q3. It's always good to see those internal metrics ticking up and going up a lot of basis points quarter over quarter. Astera Labs has impressive design wins with companies such as Google, Amazon for their new Trainium chip, and with Meta. And on DeepSeek, they mentioned that as cost has gone down, adoption has gone up. The company is shipping to all hyperscalers, as they emphasize the word all, across multiple product lines. And a direct quote from management is, we really believe it's the time to press our advantage and invest in the business. Astera Labs was recently presenting at the Morgan Stanley Technology Conference. And sometimes these technology conferences can just be a rehash of things they talked about in the earnings report. But I found this conference to provide quite a bit of additional details to the company. And if you want to review that conference yourself, you can check it out for free in the Quarter app. Astera mentioned they are diversifying the company. They've started shipping Scorpio and also Leo memory expanders. So now the company has 4 products in production. And that's always good to see because if one of the products loses some traction, they have the other 3 to take the momentum. Astera Labs says that 60 to 70% of the chip is actually implemented in software, and the time to market for Astera is a competitive advantage. Astera operates as the eyes and the ears of the system. The Cosmos software is able to look for things that are going wrong or may go wrong in the data center, and this provides some predictive capabilities of when there may be an issue with a GPU. Astera started with the right North Star customers, and Amazon was an early investor in Astera. Management said in the conference that they've cracked the code and that OPEX is manageable while top line revenue growth is going faster. And that's always great to see when you see the company leadership is saying something like, we've cracked the code. They said they have several design wins for Generation 6 AI retimers, which is the Aries product, and that's ramping in the second half of the year. It's good to see they expect continued growth for Aries, which is currently their biggest product line, and that's in addition to the other products also ramping in the second half. Management said the dollar content per GPU, especially with Blackwell-based generation, is going to be significantly higher than the Hopper generation. And the company has emphasized multiple times they expect more revenue from Blackwell than they were getting with Hopper. And one key point they made was there's a design win they have where every switch is attached to the Blackwell rack. And that switch is the Scorpio switch we're talking about. So there's a Scorpio switch in this design win that they have. Continuing on with the Morgan Stanley conference, One analyst said, "It turns out there is a lot more content than we all thought." And this shows that the analyst was surprised by Scorpio and Aries and these product lines, which are selling more than they originally anticipated. The company emphasized there is a nuance with the retimers, and the location of the retimer moves from Hopwell to Blackwell. And this has confused a lot of tech analysts and people in the industry. Astera views the front end of a system as storage, and the back end as GPU to GPU communication. In NVIDIA only systems, the back end for NVIDIA systems is NVLink. However, with ASICs, which are application specific computers, Astera can be used everywhere in both the front and the back. And you can think of an ASIC as something that's designed for a specific task. For example, a Bitcoin miner is considered an ASIC, or an ASIC can be used to address one specific computational problem. When companies use ASIC chips right now, they aren't necessarily as efficient as the larger GPUs. And what Astera mentions is that the companies need more ASIC chips to get the same performance. And I think they're mentioning that because they expect more upside to some of the products they have. And they mentioned that Taurus contributed significantly to the revenue growth in the past quarter. And that goes along with their story of diversifying revenue. One analyst mentioned they were surprised that Astera entered the more established market of the network switch area with Scorpio. And when Astera announced that Scorpio was going to be released, the company was up significantly. Astera is working with Amazon and Apple on the UA Link consortium. And the company describes fabric devices as the aircraft carrier or mothership for Astera. The company mentions Scorpio as greenfield and a completely new product line. Astera was asked about DeepSeek, the algorithm which crashed many hardware companies' stock price. And Astera said that DeepSeek is acting as a catalyst to expand the adoption. And that was really reassuring to hear management say that because many investors thought DeepSeek would hurt sales. But here Astera is saying it's actually the opposite, that it's going to increase adoption. And the company repeats, we're not seeing any slowdown. Astera mentioned a trend they are seeing that not everything needs a big GPU, and custom ASICs are often good enough. Things are becoming faster, and that has opened up the imagination for many companies to discover new use cases for AI hardware. The company is able to see planned architectures going into 2027 for many companies, as companies are planning one or even two generations out with Astera Labs products. Astera has mentioned they see a $5 billion TAM for Scorpio, and I've noticed that Astera is very conservative with their TAM estimates, and that they probably account for getting most of that $5 billion TAM for themselves and not for other companies. Astera is a small team that is nimble and technology oriented, as they say, and they're investing heavily in R&D. As I mentioned at the start, the company is only 440 employees, and I like that it's a small company which is still growing. Astera says they can go from PowerPoints to pre-production in just a year, and I think that really showcases how fast their time to market is. Their products are usually not subject to export controls, and they mentioned there's fertile growth in China, but that's less than 10% of revenues right now. For hyperscalers looking to modify and go to Scorpio, they simply need to expand their existing Cosmos API. And Astera mentions that giant clusters have a lot of issues coming online. They need a lot of diagnostics, and they don't work out of the box usually. Cosmos is a goldmine of information, and it allows hyperscalers to take appropriate actions and troubleshoot their systems. Astera discussed how predictive failure cases can be detected with Cosmos, and they gave an example in the conference where Cosmos could predict something failing up to 21 days in the future. I was surprised that Cosmos may be able to predict out that far. And the company said systems are becoming more complex and they need a top class nervous system, which is what Astera can provide. Let's review who the competition is for Astera. There's legacy hardware providers such as Broadcom, Marvell, and Texas Instruments. And Broadcom is a $1 trillion company, roughly. And that's encouraging that companies in the space can reach that $1 trillion market cap. There's also newer competitors like Credo, a company I used to own, which has a similar market cap to Astera. Credo overlaps on the Aries product line. And recently, Credo reported numbers where Amazon was their number one customer, making up a huge percentage of revenue. But Credo also said that some of the other customers didn't spend as much in the quarter. So I am wondering if Astera may have picked up some of those customers. They do overlap and they do compete, and hyperscalers have said they want to source from multiple vendors. Let's discuss who the incumbent in the space is, which is NVIDIA. And they had a previous acquisition of a company called Mellanox, and that's been a key role in developing NVLink. It's important to note there is overlap on competitors and customers. For example, in the Amazon Trainium chip, it includes components from Marvell and from Astera Labs. So Amazon is building with multiple vendors. Additionally, NVIDIA is a customer of Astera Labs, but they also compete with Astera Labs on certain products. It's always good to look at concerns or potential bear cases for companies we're investing in. And the concerns I have for Astera Labs are that GAAP EPS was on the lower side. And I mentioned this before, the profitability might not be growing as fast as I expected. However, the company is hiring, and I think that's a reasonable explanation that they're increasing headcount. They're also designing a lot of new products. So it makes sense when they're still in the design phase that profitability may take some time to catch up. However, I expect as the company scales, profitability will again start ramping up. In recent quarters, gross margins have come down from about 78% to 74%. And the companies mentioned they expect this number to stabilize at 70%. The reason being is the Scorpio product line is more heavy on the hardware side, and the hardware side is lower margins. So I'm still buying what the company is saying here, but it's something to monitor that the gross margin doesn't go below 70. Another concern I have for Astera is their reliance on Taiwan Semiconductor, which could be an issue going forward. However, the company has detailed extensive plans about redundancy and backups in case there was an issue in Taiwan. Lastly, I had seen a financial story that said Marvell, a close competitor to Astera, was seeing a slowdown in AI spending. However, I reviewed Marvell's last transcript and I found nothing which said that AI spending was slowing. They actually said traditional components or hardware components might not be growing as fast as I expected, but the AI side was growing very fast and more than made up for that. And it seems like a lot of times there's clickbait articles that try to explain why a stock went down, and they might just make up a reason even though it doesn't exist for that. Lastly, I wanted to review Astera Labs valuation. The stock price has come down quite a bit from its highs, as it was over $140 back in January and now sits at $70. And usually, when you see a company drop about a half in value, it's from a disastrous earnings report or something really went wrong in the company. But a lot of the downturn is due to general market conditions and a fear of growth stocks or moving to safer assets. You can see on the graph too where the DeepSeek drop happened in February and the company lost a lot of value. Yet it only recovered about half of that value from the DeepSeek drop. And the companies mentioned DeepSeek will actually act as a catalyst for the company. When Astera went public in March of 2024, the stock was originally priced at about $40, but it shot up to $80 right out of the gate. And back then, Astera was much more of a story stock. As we saw in the financials, before they went public, they had about $50 million of revenue and weren't profitable. And since that time, they've nearly tripled revenue, yet the stock price is down. And you can see as well in August of 2024, the stock price hit lows when money moved away from AI stocks as well. It then had a big run up, so there's been a ton of volatility with the stock price. When we look to measure valuation, for a company like Astera, we'd prefer to use price to sales as the company just turned GAAP profitable. Additionally, their negative IPO expenses would still be included in a PE ratio. There's a number of different ways to measure price to sales, and the method I prefer is the run rate, which means you take the current quarter, so they had 141 million of revenue, and you multiply that by 4 to extrapolate out for the whole year and divide by the market cap. And the standard way to measure price to sales is trailing 12 months. But with really high growth stocks, if we look back 12 months, they had 50 million of revenue. And since they have 141 million of revenue, we don't expect them to really go below 150 anymore. So when we include that really low revenue from a year ago, it somewhat distorts the metrics. And another way to look at PS is potentially forward PS, but that builds in analyst estimates of what revenue is going to be. And analyst estimates are often off by a lot. That's a long way of saying I find the run rate PS to be the most balanced way to measure it. And of course, we want to do apples to apples comparisons across our companies if we're going to compare Astera Labs to Credo or Marvell or something like that. With the run rate PS being 20, the company's definitely at a better valuation than it was recently. And I think with the high growth and the company mentioning they're going to ramp in the second half of the year, we can expect them to outperform in the near term. Let's review what we've learned about Astera Labs. They are a fast-growing AI hardware company that has a lot of impressive relationships with hyperscalers. Many of their products are ramping in the second half of 2025, which should provide an extra catalyst to revenue. Additionally, the company mentions DeepSeek acts as a catalyst and not a hindrance to growth. Astera has a software-driven approach to designing hardware, and the time to market is a competitive advantage. I want to keep an eye on profitability metrics and OpEx as the company scales. Currently, Astera is a top conviction position for me. And just as a final reminder, this video is not a recommendation to buy Astera or any stocks. And let me know what you thought of the video. I've been working to improve the audio quality and the video quality, which should be going up over time, but I'm still pretty new to YouTube, so looking to make the overall quality better. Thanks.